Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Mike Willis, co-founder of Cyber Hornet ETF, an ETF that leverages or combines the S&P 500 index and Bitcoin-related themes. Mike, it's great to have you with us. Welcome to Trade Talks.
Thank you, Jill, for inviting me.
All right, and let's talk about the methodology behind this. Why Bitcoin and why the S&P 500 index?
Why Bitcoin it's the new high-risk return asset investment class on Wall Street. Bitcoin's 49+% annualized returns over the last 10 years have got a lot of people excited on Wall Street who are used to more traditional returns between 2 and say 11%, depending on the asset class. So we believe Bitcoin will be added eventually to model portfolios. And this is the digital era of, and digital money is just part of that. So Bitcoin is the new kid on the block, and we're using the S&P 500 to introduce it and protect that downside vol for Bitcoin holders.
What are your thoughts around the SEC approval for a Bitcoin spot ETF? How do you think this impacts the asset class as a whole?
Well, I think it marks the start of the Bitcoin era on Wall Street. 6 months ago, you took career risk to talk about Bitcoin as an institution on Wall Street. And after the BlackRock filing, you saw the response, but essentially it shifted overnight. Larry Fink went on roadshow and started promoting the benefits of Bitcoin. And you could see the institutions around Wall Street starting to warm up to it. With the spot approval last week, what you're seeing now, in our opinion, is the Bitcoin era on Wall Street has begun. It was live and well for the last 14 years, 15 years outside of Wall Street, but virtually non-existent on Wall Street. So this is a momentous occasion.
Which is interesting as well, Mike, because after the approval came out, I mean, the reaction to it in terms of Bitcoin price was clearly muted. What are your thoughts in terms of price action as you look a little bit longer term out?
Yeah, I think the price action was kind of nice to see from our standpoint, because if Bitcoin goes straight up, obviously people are going to want to own those 100% Bitcoin strategies. Our position and perspective is that most traditional investors can't handle the volatility of this new asset class. It literally fluctuates 40, 50, 60% in a year on the downside. And for most investors, their risk tolerances don't take them that far. At 40% and 50%, they're sellers of that. And so our goal is to try to figure out how to keep them in for the long term. And so we're taking the proven returns of the most widely held investment strategy on Wall Street and index on Wall Street to smooth that downside vol. We rebalance monthly.
And that was my question to you. How often are you rebalancing it with a volatile asset class included in the portfolio? And with that said, who's your target market here then?
So we're going strongly after financial advisors and the retail public. And for a financial advisor, this is a way to have a turnkey ETF strategy to satisfy Bitcoin demand and keep the assets in-house, but also to limit your fiduciary risk on the downside. In theory, if Bitcoin did go to zero, you have a 25% potential hit to that portfolio. That's a measurable hit by most standards. On the other hand, if Bitcoin goes up to 500,000 or $1 million, like some of the bulls are saying, that financial advisor can go to his investors and his clients and say, this is how we protected your downside. This is how we expose you to this asset class in a very smart way, and we got these returns for you. So we think advisors will appreciate it for that reason. On the retail side, this is how we can help retail investors hold it for the long term. Any asset class that's this volatile, you're going to get shaken out. A lot of them at the lows and buying back in at the highs, and that's just human nature when you're fighting fear and greed. So our goal is, by rebalancing monthly, if Bitcoin rises relative to the S&P 500 that month, we're selling Bitcoin high, buying the S&P low. If the S&P 500 rises relative to Bitcoin that month, then we're selling the S&P at a relative high and buying Bitcoin at a relative low. So it's a built-in methodology for how to trade Bitcoin within an ETF. So you're not sitting there having to figure it out on your own as a retail investor.
And certainly much more cost effective too for the retail investor. Mike, can you discuss future ETFs that are planned for Cyber Hornets?
Yeah, we're going to roll out several more of them, and our target is in the next 90 to 120 days, just to give investors the selection and choice of their risk tolerance. So this first ETF, the Z's, is a 75% weighting, 75% S&P 500 stocks, and we do hold those physically. And then 25% Bitcoin futures to begin with here. We will be filing a 485A filing now that it's approved on Wall Street to by the SEC to hold spot in an ETF. We will be filing for that as well in our ETF. But this first ETF was rolled out, ticker symbol Z, so that investors and financial advisors could hold Bitcoin and still sleep at night, catch your Z's.
All right, Mike, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you, Jill.